Afternoon, everyone, or wherever you are in the world. Just thought I'd do a quick little video just on BTC and where we're heading, because obviously BTC controls everything, as we know. And I've got the daily chart here, so it sort of drops it out a lot bigger, so we can see where we've come from over the last. This is from, so this would be November of 2020. Look, look how low it was then. So we forget where we are. I mean, even now, with it being around the 43.88, around that 44 mark. It seemed ages ago that we were down at 30, 34, 33, 34. So it's we're very fickle in the market about forgetting where we are. But I just sort of give you some interesting figures here. Like if you're wanting for a long-term trade, we would have seen some of this coming. If you go to the day chart, so when did it crash here? Well, we talked about the head and shoulders ages ago for those who've been following. So we have the shoulder forming there. We've got the head and then another shoulder forming here. And you can see the patterns are reversing again here. A little bit different than what it was here. It seems to be a bit more direct, which might mean that we're heading more like that, which would be fantastic if that happens. What are we really looking at here is we've got a bunch of different they're called basically the moving averages. So the grey line here is the last 200 days of Bitcoin across there, and then we've got the moving averages of 50, which is the red line, the last 50 days. And then we've got the pink line, which is the last 5 days. So you can see that tucks right in. We'll zoom right into here just to show you, which is there. And then we've got the 15, which is the purple. Now, generally, if you're doing it, what I do is when you're looking at taking a buy, is when this pink line, which is the 5, crosses the 15, that's when you're looking at sort of taking the purchase around here. So what I would usually I look for is if once it gets another green, is that we would then take the buy. So in this case, we wouldn't have taken it there because it's red. If we zoom right in, you can see the crossover is right there. So we go, okay, let's analyze this one. So we would have waited another day. Now, if that had turned green that day, totally different. So it would have come to here, and then we would have took a trade here. And now, so we would have done very, very well. You can see we had massive growth there. It's still keeping us on there, and then it's kicked over to the 50. So now we're above the 50-day. This next target is really important. If we can get to that 200, which will probably come down by the time we get there, if we do get there, that'll be fantastic. What we don't want to see is this bending around and then hitting these two marks again. If that does, then you can sell. Now, could we have avoided all the money we lost? Definitely. Or those of you did lose money. You can see straight away here. If we zoom right in when we were right at the peak here, no one was watching this. I don't know why. Everyone found this so surprising that we were going to crash. But you look here, so sitting there at 60, it's really maxed out here. The big thing about here as well to look at, and I'm going to talk about the RSI as well, which is the relative strength index. You can see it's very high here. And you see last time, if you look at the times when it's over those very high marks, there's always a downturn afterwards. But it's not high enough to maybe worry people at this stage. It hasn't quite hit over the 70 mark. But so it's fine, you would keep that. But you can see here, right here, we cross over. Right there. And as soon as that crossed over, bang. Now, at very worst, we should have been selling here, because that was a red. So we would have lost down to 60. So that would have mitigated some of our losses. And seeing it power towards the red line, you can see what happened here. It's crossed over the red line. It is sort of, you can see it sort of tried to come back a little bit here, but it never really made it. It's across the purple, and it ran all the way down. So if we had taken what's called a sell, which is a short from that period of time, and sold from, say, there, which is 60,100, sold it all the way down until we got the next signal, which was crossing, which is here, we would have done very, very well. So actually, sorry, we've got all the way back here. She would have kept going all the way over here. Actually, would have been all the way down to that 30, 38 mark. But to be honest, if it was me, if we got down to this low, I would have been taking profits right here anyway, as soon as that started to bend, because I figured it's pretty much not going to get much lower. So, well, I hope that gives you a little bit of an idea of what I'm talking about when I'm talking about the EMAs. Now, if we just scratch it down to a daily, or one that we'd use if you're doing, I use a 5-minute one generally. So at the moment, so in a short-term space, how are we looking? Well, we've seen here, it's across the same formula applies. would you believe? So we've got a crossover here, and then we've got a green bar straight away. So we take the trade. Now we're just coming across on the 50 EMA, or the moving averages, and that's going. If that clicks on there, we should see another little push, and you can see we're just crossing over. I think if I zoom in, it's just crossing over. As soon as that happens, we've got a little bit of a push happen. So it's really interesting. Now, if it can, pull it back a little bit now, but if we can then push up to this 200 again, we'll see another bit of a growth spurt there as well. And as you can see, if we can go back here, the lines crossing, which is when the pink lines cross, we had that sort of perfect storm just there before for a while. They kicked us straight up. They were all three of them, the pink line crossed all three of them almost exactly the same time. And we saw a great rise all the way up to there. So we would have got up there when we would have sold out again here, because we would have seen that same pattern appearing. So if you follow these rules, most of the time, 90% of the time, you're going to make money out of it each time. And a good way of starting off, just start off with doing it in small amounts, and maybe $1, $2 losses, profits, and just until you get your feet, and you want to give it a crack. So for me, what I'm looking at the moment is if I'm taking a longer term trades, like I took some perpetual trades. If you look at our video trading account, it's probably a good one I can show you. I've got some perpetual trades there, so I made a bit of a muck up on ADA. These are sort of sitting there, but we're a bit flat at the moment. So hopefully some of them are going to kick in. A little bit of BTC there. So this is sort of a muck around account we go on. But if that comes, once that kicks back in, which it's doing now, that'll catch up. So yeah, anyway, that sort of gives you a bit of a brief idea, and that's what I would do. As I've just got an account there with $50 in it. That allows me to I can leverage my account. So you see the one we've got here, we've got Matic at the moment. Look down to the side here, it's leveraged at 15x, and you can see. So next, and also these are the key points you got to look at. Sorry, go back to that. Is the liquidation prices. Now all of these liquidation prices are very realistic. Like none of these two have never met that. That one's been quite a while ago. So, and the losses are not big if it gets to liquidation like that, and I'm not too worried. So I don't actually run stop losses on this one. On my big account, if I'm going to do a $2,000, $3,000 trade, I'll always run stop losses, because just too much money you can lose if things go pear-shaped. So as you see what we said about, look at Matic at the moment, just had this big push as soon as we got across the purple line. Had a big push now, a little bit of a reversal, as you expect after a huge push like that. And you'll see it probably once we hit this mark here. Now you can do it exactly the same with any of these filters here. 1 minute mark, not a lot different. Just a little bit, you're doing a lot more selling and buying all the time through this. You can see it's chopping and changing over it. So, which is why I tend to go out to a 5 minute mark. But even on the 1 minute here, you can see it still gives you the signals to sell. So if you work on that, and you're almost foolproofing your system. Now, if you've got open trades. If you're doing spot, it's a little bit different. This is open trades and professional. Now, you don't want to walk away unless you've got a stop loss on that, on your main account, because it's something you've got to sit down and watch and make sure it's going on okay. So, so you can see we're taking a bit of a dive here at the moment. Why did we do that? Well, you can see here in the RSI. So that's another thing you've got to bring into factoring here is your RSI. Is the coin, we say when it's over 70, it tends to be what's called overbought. And usually there's a downturn. I'll see if I can find something where it's gone same sort of thing here. We can look at there, overbought. So if you can get both of these things to marry up at the same time, which say we want to get where it's underbought, which is 18.62%, we're buying in there. So that we would have bought in there. We could have stayed in that trade if we wanted to, or pulled out where the actual cross tells us to pull out, so, and made a little bit of money. So anyway, so that's the difference between obviously 1 minute if we're scalping it, 5 minutes for a little bit longer term. If you're really looking for a long-term perpetual trade, and the idea that perpetuals, obviously you can leverage your money, which means if I put $10 in and leverage it at 10 times, means I've got the access to, I own $10 worth of the money, but the $90 or the other amount, sorry, is then borrowed. And that's why there's a liquidation point there as well. So that gets paid back to the borrower. So you do pay interest, but the interest rates are fairly low. So I wouldn't stress too much about that. So they're 0.0001 an hour or something like that. They're very, very, very low. So when you're scalping, it's very, very little there. So anyway, I hope that helps and gives you a bit of an idea. And as I'm going to do some live trading and talk more about this next week, and hopefully be able to ask some questions. It'd be really good if you guys put some questions together you'd like, or things you'd like to learn. It helps me create these videos for you, and because obviously I don't need to learn it. So yeah, all right, well, take care and look after each other, and let's hope that BTC keeps going north. All right, cheers, guys.